What's up YouTube, Card Boss here, back with another video where we talk about cards, money investing, and today we're talking about the bearish market again, in terms of card prices, especially for the sports cards, right? And one of the things that I want to talk about today is, everybody's talking about the downward prices, the selling, the panic, and all these kind of things, right? But there are groups of people who are more bullish. Maybe they're in a better financial situation and they can make more plays, whereas some people are just conserving cash. So I'm going to talk about those group of people whereby they are actively still in the market and trying to go for deals. And what are the common mistakes that I actually noticed that these people are actually making now, despite them being more proactive, despite them being more aggressive, right? They are still tripping once in a while, and in particular is because maybe it's slightly due to overconfidence, and that's what I'm going to talk about. Some of the things that you may, if you fall under this category of people, right, you may or may not be indirectly doing some of these things that I just mentioned, right? So the first thing that I want to say is I believe that some people who are actively farming the market at the moment, looking at the downward prices, they are being a bit too trigger happy. That's right. So what I mean is they're looking at all these downward prices and they do have the financial backing to snipe all these deals, but because there's kind of like they believe that what they're buying now is huge bargains and huge deal compared to the prices that we see 6 months or a year ago, they are going in and just going to the market and just pick off pieces, just being very trigger happy, right? This card here, just bidding on many different pieces across the board, kind of like losing a bit of some of the strategies that you would have in a more upward market. So when the markets are hot, when the markets are trending upwards, you tend to be a bit more careful with the spending. You have to really allocate your resources properly, in who to buy, and stuff like that, what cards to buy and things. But when prices are down, you feel that everything is cheap and you tend to just go all in, go certain places, and you kind of find yourself going off course very quickly. And that's where some of the problems start, because once buying the cards, especially online, once the cards actually physically come in, through the mail and things like that, you got it all on your table, and you realize that, hey, why did I buy this? Hey, why did I buy that? And then we look back at some of the prices that you actually paid for some of these cards. It's really you feel as though that, why did I actually do this, right? This is not usually the kind of players that I would buy. Like, for example, my case, right? I am focused on the bigger players, like the Jordans, the Kobe's, the LeBrons. I go to the Lucas and the Stephs as well, and occasionally I'll buy the one or two odds and ends, right? Maybe a Shaq, or maybe a Scotty Barnes, right? But some people, whereby they look at it, hey, Kate Cunningham's cheap, hey, Zion's cheap, hey, Ja's going down, so they start to dabble into players that they don't usually go to. Now, I'm just using this example, right? These are all perfectly fine investments depending on the strategy that you employ. But for me personally, I don't go into Ja and Zion, for reasons of my own. But what I'm saying is, some people who has a particular strategy, they kind of steer off course, because they're being too a bit trigger happy in terms of their buying. Now, the second thing that I want to point out is the prices. Now, of course, we see all the downward prices. People tend to be a bit over cutting, or over going too under in terms of the pricing. Now, what I mean by that is this: say, for example, a card used to trend about, let's say, $500, and it's now trending down to $300, right? So it's falling down, and you feel that $300 is a fair price to pay, it's a good deal, but you kind of just want to go in the extra step just to get a little bit more of the meat from the bone, right? Trying to go in at 250, maybe 220, something like that, and you end up finding yourselves losing those auctions, right? Just by this hair margin, right? For a fact that $300 is kind of like the fair price to pay at this juncture. It was worth $500 at one point, and you do believe that it's going to worth $500 at one point. But at this juncture, it's you just want to skin that bone a little bit more, and that causes you to lose a lot of deals. And I noticed that a lot of people, they hop into the auctions, right? They go in there with a plan. Look, okay, I know that the values here, 300, 200, and so on and so forth, but they just go in there a little under, right? $20 under, $25 under, and they lose out on these kind of deals. And the potential upside for those cards can be $50, $100, $200, right? And just by trying to skin that bone a little by $10 or $20, you kind of lose the upside. And that's actually a very common thing that people are actually falling in as a mistake. So kind of these couple of things, right? Overbuying and then going a bit too cheap. It just creates that kind of overconfidence. And And what I noticed is some people, when they talk about on social media, whereby the market's a bit weak, certain players shouldn't go for it. Because these group of people, they are financially stable, they have the means to go back to the market and push more capital in. They tend to be a bit more vocal, and they tend to voice out their opinions a bit more. And that actually works against them, because they're actually making themselves believe that those particular cards will turn uptrend, right? So like for just taking a hypothetical example, right? If let's say you look at Zion, for example, coming off an injury, and there's a lot, and he's back in playing, right? He looks awesome. But of course, card market in general, prices are down. Zion cards are definitely down from where it was on the peaks during his rookie season, and still down in general, right? But it has shown a little bit of flowing up. But for me personally, I don't go into Zion, because it's not that I don't believe he's a good player. I think that impact that he has on the market, or his premiums on his cards, there's still a little bit of premium there, if you can believe it, for Zions, right? So, but some people, they kind of like psych themselves out, to say that Zion's the one, and they go on social media and it's just saying that Zion's the one, and then they put a lot of money into Zion, so buying it, theoretically on the cheap, believing that it's going to go up. But again, you're kind of like making the mistake of trying to convince yourself, whereas when you're actually, when the market's actually going on a high trend, there's all these players that's all going up, right? Like the Zions, the Jars, the Lucas, and all. You kind of like be a bit more detailed in terms of research, and to find out which of these players, has the most upside. You tend to be a bit more careful. You tend to scrutinize a bit more. But when the market is down, right, and you just pick the player that you like, you tend to just go in on that particular player. And that's a common mistake that people have. And again, it also leads to overconfidence. It's just that because you have the ability to put money back into the market, where some people are just being overly cautious, which is fine as well. You tend to be a bit more vocal, and tend to be a bit more put a lot of confidence in yourself, and sometimes a bit too of overconfidence, and that's just take away some of all the basic principles that you used to have when you were a better investor. When I say better, means that you're a bit more careful, you did more research, you tend to be a bit more step by step kind of thing. So these are the 3 points that I actually observe, that in this market, when people say that it's a bear market, right, prices are down, people who has the means and who has the financial capabilities tend to be voice out their opinions a bit stronger, and tends to go in the market a bit harder, but they tend to make the mistakes that they don't normally make when the market is actually going on upward trend. So I find that pretty unique. So this is just some tips for you guys. If you guys are operating in this market, I am operating in this market as well. So it's good to be disciplined. I think that's the main thing, regardless of whether prices are up or down. Of course, if your financial means are better, you have the ability to place more bets in a way, but it doesn't take away the original strategy, it doesn't take away the original principles they have in terms of card investing, and when you enter into this market. So that's what I got to share for today. Hope you guys got something out of this video. Do like and subscribe, and follow this channel for more videos in the future. Thanks for watching, guys. Cardboards out.